Hi guys, welcome back to my channel. In this video, I won't be showing you guys how to trade but when not to trade. This is because sitting on your hands in a choppy market is one of the most important characteristics of a consistent, successful trader. Most of the traders out there, they already know that in a choppy market condition, when the market is in a range, you should lower your position sizing or not even take a trade at all. That is called sitting on your hands, and that is very, very difficult to do. Personally, for me as a trader, I like to focus on these three things before taking any trade, because the main question I get is how to identify if the market will be choppy or in a range. The first thing I like to do to identify a choppy market is to focus on the relative volume, that is called R-vol. On my platform, Dash Trader Pro, you can add a column on the watch list and it shows the R-vol for all the stocks I'm watching for the day. But if your platform doesn't show it, you can use finviz.com. It's a paid subscription and you can see real-time R-vol for the stocks you are watching. What R-vol shows you is that the volume in the market is higher than average or lower than average. We typically see low R-vol when the market is in a range or the market is waiting for an economic event, or we have FOMC meeting, that is a Fed official meeting we have every 6 weeks. In those cases, we usually see that the R-vol is very low, and I know that if the R-vol is low, the chances of the plays working out in my favor is very, very low as well. The second step in identifying if the market will be choppy is to look at if the market is in a range. Now it also depends on the first step. We usually see market in a range if the R-vol is really, really low. So all these steps are linked together. I like to focus on market internals like SPY and QQQ because I trade a lot of tech stocks. So if these two ETFs are in a range, then I know that I have to reduce my position sizing or not even trade for the day. I personally use both these steps together. So at the market open, the R-vol keeps updating. I will know that the volume in the market is higher or lower than average. If it's higher than average and the market is showing clear uptrend or clear downtrend, I know that those are the times I can increase my position sizing and capitalize on good trades. And if at the market open the volume is very, very low, the relative volume is low, and I see that the market is not giving any clear trends, those are the times I have to take it really slow. The third step is usually in the pre-market. Are any of your stocks from your watch around critical levels or have a news catalyst? What I mean by this is, let's take an example. I'm watching Facebook for the day. Facebook has some good news around it. Maybe they released a new platform or something, just a hypothetical situation, and it's been making a bull flag or a clean triangle on the 1-day chart. So I know that Facebook will have higher volume than usual because of the news, and I can increase my size on those opportunities. Let's now break down all these three steps with an example of 29th of June 2021. I will also show you guys my trades from this day. On this day, the market was very, very choppy with low relative volume, and what I did as a trader to protect my capital. The very first step in identifying if the market is choppy is to look at relative volume, as I discussed earlier in this video. I posted this screenshot on my Discord group after the first 30 minutes of market open, showing the relative volume R-vol on the stocks I'm watching for the day. If you want to be part of my Discord group, the link will be in the description box below. But if we take a look at Tesla, the relative volume is 91%, which is lower than average. Nvidia has 104%, which is still better than rest of the stocks, but it's not ideal. It's not like 150, 180%. Netflix has 63%, Baba 85%, Space has 197%, but this is because of a news catalyst that was released last week, but I did not see any clean moves on Space personally on this day. Shop has 73%, Beyond has 73%, Wish 91%, and AMC 50%. This means on most of the stocks I'm watching, the volume is lower than average. That just shows me that I have to reduce my position sizing on this day and I don't have to push it. Just to give you guys an example, the day I made $4,000 last week, I posted a recap on my YouTube channel. The link will be in the description box below. The relative volume on Tesla at the break of 630 level was 180%. This means that the volume on that day is 1.8 times the average volume that Tesla usually gets. What this tells me is that many traders around the globe are looking at the same stock and the same play that I am looking at, and this just means that I can increase my size on those plays and hold on to my winners a bit longer. The second step in identifying if the market is choppy is to look at the market internals. For me, it's SPY and QQQ because I trade a lot of tech stocks, so I have to keep track of what the tech sector is doing, and QQQ shows me exactly that. Let's open the 1-minute chart of SPY and see what SPY did for the first 4-5 hours of market open. This is 29th of June, and from 9:30 a.m. to 2:30 p.m. SPY was just in a range. It wasn't making any clean moves. There is no trend on SPY. It's not making higher lows, higher highs, or lower lows, lower highs. There is no clear direction on SPY. Later in the afternoon, around 2:30 p.m., SPY made a new low of the day, but I don't trade around that time. For me, my peak trading time is from 9:30 a.m. to 11:30 a.m. and between those time, we were not having any clear direction on SPY. Let's look at QQQ, which tracks the tech sector. QQQ had a similar situation for the first 2-3 hours of market open. No clear directions, just in a range. If the 1-minute chart is too messy for you, you can switch to 5-minute chart and take a look at the similar thing what was happening on QQQ. If I see these wicks on the 5-minute chart, that means the market is very, very indecisive. So I know that market can be choppy, and those are the days I don't have to push it. The third step in identifying if the market is choppy is to look at your watch list and see if the stock is making a pre-market high or pre-market low near your critical levels. For me, I was watching Tesla for the day, and let's take an example of Tesla. The levels I was watching on Tesla are the break of 695 towards the upside or 670 towards the downside. It did not break those levels in the pre-market or the market open, so I knew that I won't see any good plays on Tesla. I could see the same story happening with all of the stocks on my watch list. None of my stocks were breaking any critical levels. The relative volume was very, very low, and SPY and QQQ were not having any clear direction. As a trader, the best thing you can do is to learn to sit on your hands. You don't have to make money every single day. On days like today, I just decided to take it very, very slow and lower my position sizing even if I decide to take a trade. My usual position sizing these days is anywhere between $5,000 to $20,000 per trade, but on days like today, I just lower it down to maybe $1,000 to $2,000. Let's now jump on to my trade recording. My first trade was on Apple, and unfortunately again I forgot to turn on my trade recording. I usually forget these days, but I have noted this down on my notepad to turn on the recording every single day for you guys. But my first trade was on Apple. I took 10 contracts. I paid $130 per contract. So that means I am only paying $1,300 USD in total, and I'm reducing my position sizing. This is because if you have seen my previous recaps, I usually invest $5,000 to $20,000 if I see any clean opportunities. But because of what I discussed earlier in this video, I'm not liking anything. The market is really slow. We can take a look at SPY here at the bottom. It's very, very choppy in a zone. I don't want to invest more than I should. On this trade, I entered for the break of the bull flag. I was a bit late. I should have entered here, but I entered here for the break of 135.5. But when it failed to hold above 135.5, it came down here. I got stopped out. So in total, I only lost $100 on this trade, which is not bad. My second trade of the day was on Baidu. I was not even thinking of taking a trade. You can see that it's 12 p.m. almost. I usually get done within the first 1 or 2 hours of market open. I accepted that Apple loss, but all of a sudden around the afternoon, most of the Chinese stocks like Baidu, Baba, these started moving. And Baidu made this high of the day around 208.5. It was flagging, and then I took it on the pullback. I entered right here, and I only took 5 contracts. I traded 210 calls. In total, I was only investing $1,000 on this trade, again lowering my position sizing. At the break of the flag and at the break of 208, I took 2 contracts out at a premium price of 2.97. My entry was at 2.65, so I made around $60-70 on these 2 contracts. When I saw that Baidu is around all-time high, we might see some kind of rejection there. I don't want to be part of that. That's why I covered 1 more contract at a premium price of 3.03. I'm now holding 2 of my remaining contracts. Baidu broke the high of the day, and I knew that this level is at the top. It has moved a lot from the VWAP. 5 minutes is very, very extended. We might see some resistance here and some sellers here. That's why I covered 1 more contract at a premium price of 3.32, and my last cover was at 3.20 when I saw this huge wick on Baidu. But because of this wick, I could see the time in sale speeding up. Just to be safe, I covered my last contract, overall making $229 on this trade. That's it, guys. I only took 2 trades for the day and decided to call it a day because I wasn't seeing any clean opportunities in the market. Overall, I made $116, which is not very exciting, but depending on the market condition, we can take a look at SPY and QQQ. They were not doing anything in the morning. That's a pretty good result for me. It always depends on the trading and the way I'm trading. PNL is always the outcome. If you keep focusing on the outcome, your trading will go downhill. So I traded really, really well on this day. It's one of my best days for the month. If you look at the profit and loss wise, it's very small. But if I review my June, this is one of the best days because I was able to control my emotions and lower my position sizing. Hope you guys liked this video. If you did, give this video a thumbs up and subscribe to my channel for a lot more trading recaps. You should follow me on Instagram because I post a lot of good trading content on Instagram as well. The link will be in the description box below. If you have any questions for me, post a comment down below. I will get back to you as soon as I can, and I will see you in the next video. Thank you for watching.